Tina McGill is a CPA and a graduate of the Jack Massey School of Business at Belmont, where she obtained her master's in accounting. She spent 10 years working in the private industry as an assistant CFO before finding her way into public practice. In the 6 years she spent working in Nashville, mid-sized public firms, she identified a major disconnect between what small businesses need versus what traditional CPAs provide. This led her to develop a new concept for public accounting, VCFO Services, which grew exponentially in its first 2 years. She recently started her own firm, MMAS CPA, in an effort to change the game of public practice by providing a personalized approach to business financial management through relationships, training, and partnerships. She also served on ADP's CPA advisory board and a strong advocate for ADP in the CPA community. So without further ado, I want to turn the time over to Tina McGill, and I'm so grateful for you to be here. And we'll let you help let everybody know if I left anything out.
I guess I will get started then. If everybody can hear me okay. Again, my name is Tina McGill. I'm very excited to be a part of the Accel program and hope that today I can bring some good information to you about what's going on in our current market, what the plans are for the future, and just generally what's happening in the tax field. You're going to hear a lot of things that McKee mentioned that I'm going to also reiterate. Maintaining relationships is so important as you move through your career. Especially with regard to your attorneys, your CPAs, your team. Having a big team is so important for your success as you choose to move forward in any area of business, real estate, small business. So make sure that when you hire a CPA, that you hire them as somebody who's an extension of your company, not just someone you call in September or January or December when everything's about to start for tax season, because you want to maintain a relationship with them so that they can help you mitigate tax throughout the year. They can help you plan and strategize for deals that you may want to make and help you kind of think through the tax implications. So hopefully this will help you today at least learn what you need to talk to your CPA about, how to establish good relationships with your CPA, and make them an extension of your team. So just a little bit about Mass CPA. We are a VCFO Services company. We work with cash flow management, budgeting, as well as tax strategy and planning. We work mostly with physician practices who use real estate as an investment opportunity. And then we also work with some companies that specialize in specific areas related to real estate. It's really important to utilize technology, as we'll kind of talk about throughout the rest of the day. Just a quick disclaimer as I kind of go through today, nothing in this presentation should be interpreted as legal advice. The presentation is intended for you to understand the area of tax and to help you start to ask really educated questions to your CPA and your attorney. So I want to start with like what's going on right now with the CARES Act, because I've had a lot of questions and I'm hoping that maybe you have these questions as well. Or as you're dealing with tenants and you're expecting rent payments, how will that look for you? So Congress recently passed the Consolidated Appropriations Act of 2021, which created the Additional Payroll Protection Program. If you're familiar with the program, you know kind of the ins and outs of that. But generally speaking, for right now, the stimulus payments are a big question. Who gets the stimulus payment and how do they receive that? So for individuals making $75,000 per year, this bill creates a stimulus payment of $600. For married couples, it can be $1,200 plus $600 a dependent. There are phase-out rules, so if you don't receive one, it's because you phased out and you've done really well. So that's important. For workers who are currently receiving unemployment benefits, there will be an additional $300 that will be effective through 3/14 of 2021. This is also still expanded to include self-employed workers. So if you're currently experiencing a downturn just due to rent payments, etc., and you need to look at taking some unemployment, that's still an opportunity right now through March. A couple of changes that also happened that people aren't quite aware of in the CARES Act is that meals and entertainment has traditionally been 50% deductible, and entertainment was taken out of the option as being deductible under the Trump tax cuts. But the CARES Act is now making meals, business meals, 100% deductible. And the reason for that is they want this next year for you to go and entertain and help bring up the restaurant industry, which has been suffering so much. So as you're kind of thinking through strategies for next year, I have a lot of physician practices that love to go send meals to other referral sources, things like that. Now you can actually take the 100% meal deduction expense. Just be sure you keep receipts and maintain how you have used that as an expense for your business. So that's a positive under the CARES Act that no one's really talked about yet. Another thing that happened with the CARES Act, if you currently have a PPP loan, the expenses are now going to be 100% deductible, and that you do not have to pick up the PPP as income. That has been a back and forth for the last few months between small business, CPAs, and the IRS. So part of the CARES Act did establish that these expenses are not taxable to you, and the loan itself is completely forgivable and tax-free. So make sure if you have a set of books that you've been maintaining that it's coded to a loan account so that your CPA does not pick that up as income and tax you on that. And that's just an important conversation that you have with your CPA to make sure that everything's coded to the right location. Another thing with the PPP, which is the Payroll Protection Program loan for companies that have payroll, there's a new simplified application of $150,000 or less. So if you have not filed for forgiveness yet, there is a simpler application that's coming out next week. It's going to make you have a lot easier time and a lot less stress for asking for forgiveness for those particular loans. Another thing, if you haven't filed for forgiveness yet, is there was an economic injury disaster loan advance that you could get with the SBA early on in the CARES Act back in March, which seems like forever ago. That was actually you were going to have to pay that back as part of your PPP money, and that has now been repealed. So what that means is the idle money is now free to you, as well as the PPP funds, as long as you use them for the appropriate purposes and you meet all of the guidelines. There are new idle grants out there. There has been additional $20 billion put into idle grants for businesses in low-income communities. A lot of people don't know about that, but this is a really good opportunity. If you need a loan, check in to, if you're going to be in like a low-income area where you're buying a home that you want to resell later on or even use as investment property, this may be a good way to start to get some financing available to you from the SBA with great interest rates. Another thing that has happened with the Payroll Protection Program for number 2 is there is going to be dedicated funds for restaurants, independent movie theaters, live venues, and there's $15 billion dedicated for that purpose. So on the PPP loan 2, if you are applying again or you have applied in the past, businesses must have at least 300 or fewer employees. That's part of the new eligibility. And the other eligibility is that businesses must have at least a 25% decline in gross revenue in any quarter in 2020. So what that means is in 2020, if you look at 2019 and you pick any quarter, and most people will qualify in quarter 2 because that's when Nashville shut down and there was a lot of closings during that time, then you do qualify for the PPP loan 2. Another thing about that is that you must use the funds or plan to have used the funds by the time you apply for the new loan. And there is a maximum of $2 million. To take advantage again of the PPP loan is you must have employees. With the EIDL loan, you do not have to have employees. So that's kind of the difference between the two. You can use the funds between 8 and 24 weeks. That's your forgiveness period, so that's how long you have to utilize the funds. Payroll expenses can be no less than 60% of your loan, so that means you must spend at least 60% on payroll purposes, but the other 40% can be on accounting fees, rent, mortgage interest, payroll, essential supplies, and even cloud and software technologies. You can invest in like an portfolio if you're interested in that, and that should be part of the forgiveness package. A lot, as McGill mentioned, a lot of businesses use that portfolio software because it's really convenient, even for the CPA on the backside, to get the numbers that they need to help put together your financial statements. And on top of that, there's some great resources like Amenity Boss and Parking Boss if you're interested in technologies. Amenity Boss helps you have an app on your phone that you can send to all your tenants, and they can book time in different places in your residence areas, like if they need the pool or that they want to use the conference room. So that's really convenient, as well as they have a Parking Boss app that will allow you to have designated parking areas and add additional revenue for parking fees in your locations. So restaurants and hotels, everyone will get 2.5 times their monthly average payroll if they apply again for the PPP. But restaurants and hotels have the opportunity this time to receive 3.5 times their average monthly payroll. Another area with regard to the CARES Act is the FCRA, which is the federal credit for sick leave. It's the Families First Coronavirus Response Leave Act. What this act does is it provides up to 80 hours if you have an employee who's sick or out with COVID, or their family has to quarantine, or they have to take care of their children because of COVID-19. This is a refundable credit that you, the company, can get back for up to 80 hours for that employee being off. Right now, one of the biggest things I've seen across small businesses is it's really hard to keep staff. After they've been at home for a while, they've made some life changes and decisions. And a part of that is if you don't provide your employees with sick pay when they are sick and take care of them, they may not stay on board. So this Families First Coronavirus Act is free to you as the employer, and you can provide that. It's dollar for dollar credit for the time that employee takes off. So the thing is, it's 80 hours. Qualified sick wages will be from January to March 31st right now. And the credit, again, is 100% of qualified wages, and that does include the healthcare costs. And you take this credit on your payroll reports. So if you have payroll and you work with like an ADP company, or you work with Paycom or Paychex, or even if you use QuickBooks Online, which some people still do, there is a credit available there. So work with that team and make sure that you're getting every credit you can, because after June, I think a lot of these great credits that have been available are going to be gone. So leverage what you can now to take advantage of. Another opportunity that's outside of the payroll protection program is something called the employee retention credit. And this credit is in addition to the PPP, and you can actually retroactive it back. So what happens is if you have a 50% drop in revenue in any quarter in 2020, there is a refundable credit up to $7,000 per employee. It's actually $5,000 per employee in 2020 and $7,000 in 2021. Originally, you could only take the ERC, which is the Employee Retention Credit, or the PPP loan, And now Congress has retroacted that back, and now you can take advantage of both as long as you do not use the funds for the same purpose. So payroll companies are expecting a lot of people in 2021 to go back to the quarters in 2020 and do amended 941 so that they can take advantage of this. So if this is something that you're interested in, I would definitely talk to your CPA. They can help you with that process, and also your payroll company. So employers who are eligible for this credit, you have to have employees, and you must have a significant decline in gross receipts, or you must have had to partially suspend operations during any calendar quarter due to a government limiting event. So again, that's in 2020, a significant decline in gross receipts is defined as a drop of 50%. In 2021, it's a decline of 20% in any calendar quarter for Q1 and Q2. And employers have the option of using the gross receipts from the immediately preceding calendar quarter. So that means you can go back and look at 20 to determine if you qualify for 2021 and start utilizing those credits now for that 20% drop. As part of this process, one of the things that clients have really noticed is they don't have great books. You have to have good books so that you can make these determinations. So again, having a system in place for you, if you're using Appfolio and QuickBooks Online, whatever your accounting system is, make sure you have something where it's up to date, that you're working with a professional. So as these grants and opportunities come along, that you're prepared to present financials that will alleviate and allow you to be ahead of the game when it comes to these programs.